So dear students, welcome to Devika's Commerce and Management Academy. Smoothly, softly, easily we are working income from house property. No tension at all. Na? So today we'll see another type of problem. A small twist is there. So how do we work out that? So through a problem I'll explain it very clearly. So far if you have followed well, then only work out this problem. Otherwise please be thorough in the first classes. 4 classes already over. Be thorough, then only come to this 5th class. Before going to that, let me tell you, I'm spending a lot of time and energy especially for you all. You have to do something for me. That something is nothing but sharing these videos. That's it. Please share with your juniors, seniors or your classmates, whoever it may be. Please share it. That's it. Now coming to the problem. So simple problem it is. Black pen, 1 minute. Got the black pen also. Now the problem information is given this much only. Compute income from house property. So what is given? Municipal rental value, MRV. Municipal rental value is 18,000. Rent received means actual rental value. Actual rental value. And municipal taxes 1500. Interest on loan paid 2000 and repairs 1600. Only this is the information given, asking us to compute income from house property. In fact, the problem is very lengthy, like given Mr. Sharma is having a business and he is having a house and his house municipal rental value is like this. In paragraph wise it is given. Everything is noting on the board, it's taking lot of time and place. That's the reason only gun points I have written, means main points I have written on the board. This is the problem. Am I clear? In the exam you won't get like this, it will be lengthy. Okay, getting it? Now this is the information given to us, compute income from house property. You know the pro forma. Okay, so as per the pro forma, first we need gross annual value. To get the gross annual value we have these 3 steps. But we don't have all this information. MRV is given, municipal rental value is given, okay, and actual rental value is given. And is there any fair rental value? No. Standard rental value? No. So if this everything is not given, no need to go for these 3 steps. Only 1 step is enough. So that is, we'll show it in the working notes. Working notes, calculation of GAV. Gross annual value. So how do we calculate here? We know only MRV and ARV. Out of these 2 only, whichever is high, that will be the GAV. So here MRV, municipal rental value is here 18,000 and actual rent received means ARV, actual rental value is here 24,000. Whichever is high, that is GAV. High in the sense this is 24,000. This is gross annual value. Are you getting it? No need to go for these 3 steps because FRV is not given and standard rental value SRV is also not given. So how do we go for these 3 steps? So this is the speciality of this problem. Are you getting it? If no information, only 2 information is there, whichever is high, that is GAV. GAV we got 24,000. So I'll write here 24,000. Then after that what to do? Municipal taxes, here we have municipal taxes 1500. We'll deduct it 1500. If we deduct, you will be getting net annual value, NAV, okay, net annual value. 22,500. So this is net annual value. There are some standard deductions as per the section 24. One is section 24 subsection 1. Subsection A says that standard deduction 30% on this. So 30% on this means 22,500 into 30%. So how much it comes? 22,500 into 30%. It is 6,750. 6,750. This is standard deduction, 30% on the net annual value. Next, there is another deduction, that is section 24 subsection B. It says any kind of interest on loan, that is to be deducted. Here we have interest on loan paid. So that comes under the section 24 subsection B, interest on loan. Second one, interest on loan as per section 24 subsection B. How much it is? 2,000. So if we deduct it, you will get income from house property. And you might be having another doubt, repairs are there, madam, what to do? Repairs doesn't comes under the calculation of income from house property. Repairs, transportation, way, or any kind of expenses you find it, ignore it. We have to follow only the standard format. What is needed is here GAV, municipal taxes are there, deduct it. Then after that, if any deductions like section 24 subsection A, standard deductions 30%. Section 24 subsection B, interest on loan. That's all. If any arrears of rent, if we are receiving now, that is also to be added, but after 30% deduction, like we have done in the previous class. Okay, so that's it. We are ignoring this repairs. It is nothing to do with our calculation of income from house property. Just ignore it. Now this is the problem. Now 22,500 minus, so what are the deductions? 6,000, 22,500 minus 6,750 minus 2,000. It is coming to 13,750. That's all. This is the income from house property. Please note down and I'll give you recap once again. Take a screenshot or note down. So in this problem, what happened is here, we did not get the total information to calculate the GAV as per these 3 steps. We have only 2 information is given. One is MRV and ARV. Only 2 information. If 2 are there, out of these 2, whichever is high, that is gross annual value, GAV. GAV, you got it like this. Next, we have deducted the municipal taxes here, so that you got net annual value. From net annual value, deductions, standard deduction, section 24 subsection A, 30% on this deducted. And also section 24 subsection B, interest on loan, it is given 2,000, that is also deducted. That's it, simple problem, nothing to worry. We'll work out few more problems so that you will get lot of confidence and small adjustments, small changes that you can make down very clearly. Okay, so stay connected and don't forget to share these videos. Check out the playlist, whatever may be your course. Definitely some chapters, some subjects will be useful for you. Use it and get a good marks. Good luck.